live trading. And the reason why I'm starting to do these kind of trades where you see me analyzing my live trades is because it's something I would have appreciated when I started out, and that's to see forex traders, the actual live trades where they're trading properly and not like showing you the MT4 demo accounts, but realistic trading, where you can see risk, you can see strategy implementation, you can see exit strategies and things like that, and basically how to analyze the markets and routines. I would have loved to see that. So hopefully you'll appreciate it. That's the first thing. And then before we dive in, let's dive in now. This is the Euro Rand, right? So on Fridays, I like to do what's called trade review, and I've talked about it, I think, in a lot past video I did. And basically, it's when I go through my trades that I've taken over the week, and I see what's the game plan for the next week going ahead, what I see happening. I write it down. It's important for you to write down a strategy for your trade and to plan your trades over the weekends, because once the markets start moving, you'll be very, very confused, and things tend to seem distorted once the markets start moving. For example, this was Monday morning. If you hadn't planned over the weekend, you would think that this pair was going down, right? Look at that. This is from Monday, a huge shove down. But had you done your analysis over the weekend, you would have said, this is the game plan. We're looking for a buy opportunity for a bullish flag. This is the pattern. This is the strategy. This is the exit. And so it's important to do trade reviews. And so I wanted you to get a feeling of what that looks like. Anyways, let's jump into it. I want to say, first of all, that there's no one way to trade. Like, there's several ways, and I want to show you that right now. So, for example, on this trade, what I did this week was, I did talk about it in a past video of mine, that I said Euro Rand trade. So last week I had gotten on this entry here, and price was going up, and I thought, okay, it's going to continue going up. What happened on Monday and I think Tuesday was that price came all the way back down and then tagged me out for break even, right? So I usually tend to open maybe two positions at a time because I want to cover my spreads. When you're trading like two lots and big sizes, you want to make sure you're also covering your spreads. Because a lot of people forget about spreads, and it's an expense that you should be accounting for. You can't just be trading and forgetting about spreads. So when we did touch this high, I did close for, I think, about $20 or something, just to close my spreads. And so once price did come and tag me out, I was taken out of the trade. What I did do though was I waited for the next opportunity, because this did look like a bullish flag. So first of all, I drew my support and resistance lines, right? Go to the line chart to see clearly. So if I do this, you'll see that here's the support and resistance area here, especially with this 8 moving average. It also helps in marking out the support and resistance line. So if you can't see clearly with the pin bars, try shifting to the line graph and the moving averages. Those help quite a bit. So I drew my support, and I was aware that once we got to this area here, which is the same area we did push up before, anything could have happened. It could have continued going down, it could have continued going down, could have continued going down. So what did I use as a mechanism to get in? I went down to the 15-minute and I looked for a divergence. By now, I think you should know that I appreciate divergences and I love them. So here was the buy divergence. You should check out my divergence video if you don't understand divergences. So this was the push up. Price came back down again, and then once I saw this doji here, this bullish doji here, then it was a signal for me to get in. And then I held. The week was going good, And then what happened was we saw a descending, a symmetrical triangle, sorry. So what I did, I think on Wednesday or Tuesday, was I got in on another position, because this is a totally different pattern in itself. This is not like a divergence or bullish flag. This is a totally different pattern by itself, and it's a symmetrical triangle. You can Google what it is basically. And so I knew that price was fighting to break through this area here, and you can tell even by the candlestick pattern, this long wick here shows a rejection of this resistance trend line. So I added another position and I got out today. So this was the second trade I got in, I got out. And it was basically when I do like inter-day trades or day trades, it's usually on a position that I already have confirmed that I'm correct. Because if you want to trade on positions you don't know whether you're correct or not, and you don't have a position, then you're most likely going to get stop loss. So it will usually be a pattern, and I'm already correct in that trade. So that was the second opportunity. This was the first opportunity at the divergence and support, and here was the second opportunity at a symmetrical triangle. You can Google it if you're not too sure what it is. And then if we zoom out, we get to see this bullish diverge. We get to see this bullish flag much clearly. Here was the flagpole, right? And then we see this huge channel here. Price is trapped within this channel here, as you can see. And then price comes all the way down to this low here, which it's done this before, and then price shot up, right? And I also talked about this last week about how the fundamentals also have to be aligned with your strategy. So I did talk about the euro strength and the news on FX Street. I get my news from FX Street, and they were talking about the stimulus package. I forgot how many billions it was, 750 billion, I think, or I forgot the exact amount that the eurozone was going to hand out as a stimulus package, and that was going to basically help push or recover the euro economy. So obviously the fundamentals lined up with the technical. You have to also start to understand fundamentals. A good opportunity is to read a lot of FX Street articles. Now, be very careful because a lot of analysts on FX Street basically just tell you nothing. They say it's going to go up, it's going to go down, going to go up, going to go down, and they end up telling you nothing. You shouldn't be looking for news that tells you what's going to happen. No analyst knows what's going to happen. And if you look through their articles, you'll see they'll post every hour. These people aren't really actually trading. Their job is to basically write about what's happening in the market, not to tell you what's going to happen. So if you're going to read news, especially like on FX Street, like I do, look for news which just tells you the data, which tells you the Eurozone is about to release a stimulus package of such amount of $1 billion, and then you start reading up on what other analysts are saying about this, and you research, listening to what other analysts are thinking, what they're saying, what's their opinion, and then you make up your mind. So it's a combination of technicals and fundamentals, and it's also important to take advantage of all the opportunities. So it's not enough to just enter here and then exit here, right? You should also take advantage of second opportunities like this, the symmetrical triangle here before the breakout. So you could have traded this as a symmetrical pattern, as a breakout, as a trend, as a bullish flag, right? So after the channel here was the trend, or the bullish flag, or the symmetrical pattern, or the candlesticks. Let's go down to candlesticks for those who love candlesticks. Not so clear on the 1 hour, but if you go down to the 4 hour, you do see a 2-bar reversal, which I have talked about. I did a video on it, and as you can see, there's a 2-bar reversal right here. And what a 2-bar reversal is quickly is just basically the closing and the opening of the next candles. So the closing and the opening of 2 consecutive candles is below a certain area. So it's below this price. It's above this price here for a buy. And then that would have triggered you. I use the divergence on like the 15, the 5 minutes because I like perfect entries. I like good entries. You don't have to. I don't know. I just have an obsession with them. So the trend continues. I don't know what we'll see next week. Hopefully, we'll see more continuation. What I do for my exit is typically I just look at the pattern. So, for example, this is a bullish flag. So my exit will be at this line here. I would wait for a divergent sell. So obviously I'm going to wait for price to breach and then wait for a divergent sell, and then I'll get out. So yeah, this is actually the same area which price dropped before COVID started. Price immediately dropped all the way from this area here. So now I think we're gonna go back to challenge that area again. I'm not gonna wait until we um, touch the highs again. Like these highs, I'm not gonna wait for that. I'm just gonna wait until we breach, and then we see a bit of a divergence, and then we're done. So basically, overall, what you should have got from this video is that there's more than one way to trade. You should review your trades every Friday, Saturday, and Sundays for technical analysis. What are you planning for the week? What's your research process during the weekend? What opportunities are you seeing throughout the market? That's what a Saturday and Sunday is for.